Hey all, welcome to ShareTreck. It's 25th of March and our weekend is about to begin. This is the very first edition of Friday weekend roundup. The objective of this segment is basically going to be to review what happened in the week, where we started and where we ended, and what it's going to be like on market open on Monday. And to do this, we are going to look at our VIX, NASDAQ, as well as the Genomic shares, if there are any specific interest items out there. We'll also look at other indicators like gold and Bitcoin, and we are going to look at the market heat map, the sectoral movement of investment. So all those things are in store. So let's get started. So what I have here for you is the heat map, and the heat map shown here is for the whole week, starting from Monday to end of market today. And it shows that the technology business sector, the huge technology companies have been doing very well. So if you take Apple, Microsoft, Google, Facebook, Nvidia, Tesla, Intel, these are all doing extremely well. And you will find that energy has also been doing well. That is thanks to the high oil prices and the Ukraine-Russia crisis for gas. So those are doing very well. However, finance has not been doing as well. And if you look at healthcare, it is not doing very well. And consumer defensive have not been doing very well. So when I spoke to you this morning, I was talking about the fact that all these big tech companies, which form a huge base for S&P as well as NASDAQ, they have gained a lot. And that's what is making the index move up. But if you look at the other smaller companies, like if you look at other software companies and information technology companies, they have not been doing as well. CRM, for instance, Intuit, IBM, others, they have not been doing as well as the big tech majors. Now, if we were to go off and look at what happened today, then you will see that Microsoft lost some value today. Nvidia lost 1.63%, AMD lost some, Qualcomm lost some, and entire software is in red today. Apple has just had a marginal gain, and Tesla has lost 0.32. And we also see that energy is still remaining good, utilities is remaining good, and our finance sector has picked up. Now, the reason the finance sector has picked up is because of the fact that the market has got a different opinion on the interest rate hike right now. So if you recollect my earlier video, on one of the earlier videos, I had shown you an Excel spreadsheet in which I had plotted the market expectation for the interest rates, and it was all 25 basis point increases, leading to a 2% interest rate at the end of the year. But the perception has been changed, and the new estimates that are coming up from big banks and economists is 50 basis point hikes, culminating in a 2.75 or 3% interest at the end of the year. So when the interest rates is going to go up, it's beneficial for the bank because their margin is from the spreads. So you can see that the bank stocks are going up. And also when the interest rate is going up and there is high inflation and the oil pressure is there, there's a great deal of chance for a recession. And when a recession happens, people will try to put their investment into places where they are assured a return and their capital is safe. So energy, real estate, and utilities, these are the places where the money will go. And we can see the movement happening today. The yield curve is inverting when you look at the 10-year to 2-year difference in interest rates, yields. And as it tends towards zero, it signals the impending recession. So the way Kathy Woods was looking at a recession was very different. I had shared that with you in an earlier video. And what is seeming to be happening now is quite different. So I'll talk about that a little more subsequently. But that's all I have in this segment for the heat map. So here I have an article from CNBC which talks about mortgage rates soaring higher to 5% in its second huge jump this week. So this is a matter of concern because COVID-related subsidies are off, and the supply chain related problems has pushed up the price, along with the inflation that is flowing through high oil prices into transportation of materials and everything. So the price of product and delivering the product has also gone up. At the same time, people are having less capacity to purchase. Now, in this kind of a scenario, if the mortgage rate is going up, is going to have fundamental effects in weakening the economy. The first thing that's going to happen is that people will find that they're putting more of their income, more percentage of their income into servicing their housing related costs. This could be property taxes, mortgage, and any renovations and those things. All of those things are going to cost very high. And people need to service these things because they need a roof over their head and they have to be there. So in terms of renovations, the absolutely essential ones like a leaky faucet has to be fixed, a leaky roof has to be fixed. Those kind of things will be definitely taken care of. But when it comes to renovation and all, the demand will become a bit sluggish. That's my personal opinion. Also, the cost of oil and the supply chain bottleneck has made automobiles more expensive. And even people who already have an automobile are going to find that they're going to spend more money on gas, and that's going to take another chunk out of their disposable income next to the housing costs. And food, everyone needs to eat food. So the food inflation is also going to take a higher bite out of the wallet. This means that people are going to have less and less available to indulge themselves in the occasional fancy shopping or just discretionary buying. So those things are going to dampen the economy and tend us towards a recession. So that's my personal opinion. And this interest rate is only going to go up. This 5%, which we are seeing right now, is probably still low compared to where it's going to go by the time the Fed is done with raising all the interest rates. So now here we are with our TradingView platform, and we are looking at the VIX. So this is the live VIX that I use nowadays. And you can see that the VIX has been dropping very sharply. And today it has ended at 20.80. And the VXN also has done a similar thing, though not very steep, but it has come down below the support that it had of 27.73. So that support now becomes a resistance. So this is a good move so far. And if we were to look at US oil went up marginally, but it is way below where it had been yesterday. But it's above where it closed yesterday, but it's been below where it was yesterday. So there's some kind of a consolidation happening here. We still have the support of the 9-day exponential moving average, and the MACD is still running parallel and or probably on top of the signal line, and the momentum is still above average, though pointed downwards. So all in all, oil still seems to have the ability to strike back and go higher. So we'll have to see what happens during this weekend. And if something good happens in terms of some agreement between Ukraine and Russia, then things will start getting better. But if not, then we still have the potential of oil again spoiling the party by going up. And you will notice that even though the VIX dropped significantly today, our NASDAQ has been losing value. NASDAQ is still ended negative, even though the VIX has fallen 3.93. Even if you look at VXN has fallen 1.97%. So there should have been a gain in NASDAQ. That's the conventional wisdom. The reason it did not happen is that what I mentioned earlier in the morning, that there is a good potential of profit taking because the NASDAQ had been going up steadily for this entire week. And at this point of time, given that Saturday and Sunday are non-trading days, many people would like to take some profits and keep the money handy on the sidelines. Now, the thing to watch for is that if Saturday and Sunday end up being uneventful, we are still going to get a jump Monday morning, in my opinion. However, if on Saturday and Sunday there is some resolution of the Ukraine crisis and there is a ceasefire and things start moving in the right direction, Monday we'll see a super jump. It's not going to last, but there will be a super jump on Monday if in the event that such a thing happens. The reason why it would not last is because we have a mess that has to be untangled and it's going to take time. And the mess is related to the supply chain bottleneck created inflation, which has been compounded by the increased oil price flowing through all the commodities into the consumption materials and hiking up the rates for all services and products and creating a really, really difficult situation for the government. In order to take care of that inflation, the Fed is on a spree of increasing the interest rates, and also tapering is over. So All these things have got to resolve themselves over a period of time, and it's going to be messy because as the interest rate goes up, the purchasing capacity of the people is going to go down, and that means that they won't be able to afford products. So the products that are going to come through the supply chain will probably have to be sold at a heavy discount, and that means the profits are going to go away, and probably companies will have to struggle to stay afloat. And in that kind of environment, people would not want to invest in new ventures. And also the interest rate being high, cost of capital is high, and the returns are not seen. So all these things tend to push us towards a recession. And that thing needs to resolve. That's the reason why I'm saying that even if there's a smart jump on Monday, it's not going to last. We got to take some profits out there. The second reason why it is not going to last is because we have got the midterms coming up, and typical market wisdom is that by the end of April you sell and you go away in May. Don't look at the market in May because it's going to fall. So this has been the general trend. So I think that any greens that we see, they are most likely to happen this month. And from May onwards, things are on a downward slope. That is my personal opinion. And we'll see if it comes true or not. So that's what I have to say with regard to NASDAQ. And let's go and look at where the chips have fallen when it comes to our biotech shares. So let's look at all of our biotech shares. So if we look at Vertex, Pfizer, Novartis, Regeneron, these are all positive. And if you look at the characteristics of their chart, Vertex is already in a bullish channel. Pfizer is also in a bullish channel, I would say, because if I was to connect the higher lows that are coming up here, they will all line up together and form an angle which moves upwards, showing a bullish trajectory. So that's for Pfizer. And for Novartis also, we had consolidation, and now I think we are definitely moving up, and this is the creation of the beginning of a bullish channel. In terms of Regeneron, again, we have a very prominent bullish channel, and this bullish channel needs us to consolidate a little bit before we move up further, so that our bullish channel is not very steep, because those are unsustainable. So we need some consolidation here. So maybe in the early part of next week, if we have some consolidation before we have our next higher low, so that when we connect them all together, we have a much more smoother angle closer to 45 degree, which is what I prefer as compared to what we have here right now. But if you look at all of the others, these are all the companies which do not have revenues backing them up, and that's the reason why they are in this situation. Now, these are all one-day candles, just to give you a perspective. So if we were to look at CRISPR, for example, I can see CRISPR Therapeutics developing a bullish channel. We have a big test next week, and hopefully if we pass that, we'll come through this bullish channel. And even otherwise, what would happen is, instead of this channel being at 45 degrees, which is what I prefer, we'd probably be in a 25 degree or some angle like that. So right now I'm going to leave it here. And this is still a bullish channel in my books, even though we have fallen below our original plot, but this is still a bullish channel. So I'm not going to go through all the genomic shares because we just did that in the morning, and more or less everything has fallen in line, except for some surprises like ARCG, which I thought would fall below its resistance and the 9-day and 20-day exponential moving average. It did not. It stayed above all of those three averages along with Teladoc. So that's a really good outcome, and I'm happy about it. And to summarize, the theory that I'm proposing now is that the NASDAQ fell despite volatility going down. The reason being that we had a handsome gain this week, and participants decided to take some profits off the table and keep cash handy, because the weekend may bring many possibilities. One of the possibilities for the weekend is that there's a ceasefire between Russia and Ukraine, and everything gets well, and it goes on the mend, in which case on Monday the market is going to really shoot up like anything. The second possibility is that the situation gets even worse, and there is additional hostilities or deployment of certain weapons which are not in line with the international expectations, like weapons of mass destruction or something like that. In which case the market is going to open really low on Monday. And the third possibility is status quo, in which case the market will open slightly higher than where it ended today and resume the bearish tone in a very moderate manner. And overall, all these gains that we are getting, in my opinion, will last only until end of April, most probably, because traditionally in the month of May, the markets start falling. And then when you come closer to the midterm elections, the markets fall. So that possibility is there. So any upswing is something that is to be taken advantage of, in my opinion, and that's what I'm planning to do. Today, I could not sell any of my shares, even though quite a few had come into profit, because by the time I finished my recording and went back to my desk, things had already started going south. So I'll hope and see if I can do something like taking profits towards the third week of April, which is my plan, or maybe even earlier if things get a bit dicey. So this is the first end of the week segment, and I'm planning to think through this and put appropriate portions or segments into this video going forward, and we'll have much better content. Please give me your feedback and whether you think that this is useful, or there is no need to take the efforts to put out a Friday video. Please put it in the comment. Interaction is always welcome. Thanks, and thanks for watching this video. Please like the video if you did. That will help other people spot the video on YouTube. And please subscribe. That's what will help us to grow and reach our number of 500 so that we can have our community tab. So that's my next shiny object, and I hope that's for the community too. Thanks and have a great day. Bye for now.